Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name is Abhilash and welcome to Cut to the Chase. What a difference 24 hours can make. When I was looking at markets yesterday, they were buoyed by the progress in talks between Russia and Ukraine, and equity markets were up while oil prices had declined. However, overnight the optimism faded a bit as Russia said it was regrouping its forces in a push to complete the takeover of the eastern Donbas region in Ukraine. Now, as we had highlighted yesterday, the lack of a ceasefire agreement between the two countries has meant that the progress in talks has been limited in our opinion. Unsurprisingly, oil and gold prices climbed higher while US and European stocks closed lower overnight. In fact, we are starting to see the spillover effects of Russia-Ukraine conflict filter through to the economic data. The March inflation data for both Germany and Spain surprised to the upside. If we zoom in on Germany, the harmonized consumer prices jumped from 5.5% last month to 7.6% in March, which was much higher than consensus expectations. Electricity, gas, and fuel prices rose almost 40% in March and were the key drivers of the inflation spike. Naturally, this complicates the path for European Central Bank, which faces two opposing forces. On one hand, it has to support the economy, which will be negatively impacted by the conflict, while trying to manage the surge in inflation. ECB President Lagarde yesterday stated that any rate adjustments would be gradual. However, markets don't seem to be buying into that as short maturity bond yields and the euro rose as markets are betting that higher than expected inflation would force the ECB to hike rates and end their era of negative interest rates sooner than expected. Inflation is likely to remain the key focus today as well, as we will be getting the latest reading of the PCE deflator, which is expected to rise further from the previous reading. Now, PCE deflator obviously is the key gauge of inflation used by the US Fed, and a sharper than expected rise could raise the odds of a 50 basis point rate hike in May. Finally, Steve will be back tomorrow with Through the Noise podcast to place all of these events in a larger context. If you enjoyed the podcast, please don't forget to rate and like it. Thank you for listening and wish you a happy trading day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.